say, you know, you people, my people, whatever you're saying there, I think what he meant is that they're not his appointees. I don't know. Or he could have meant more subliminally that they're not people that share the same mindset that I thought. But whatever he meant, let's talk about the Fed and whether, Stephen, Trump's critical, Wall Street Journal, Trump's critical drumbeat complicates the Fed's next move. And I see what the Journal is saying. It's that, you know, when someone wants me to do something, I really do everything I can to resist because I don't want someone telling me what to do.
We're not puppets.
But Powell could always fall back on the Fed funds, right? And say, this is not me. This is just getting where, you know, just getting where we're supposed to be. He could fall back on where European rates are. Or he could fall back if he sees the PPI today or whatever he sees that looks like inflation is really low. He could say we're missing our inflation target and fall back on that. Can he do it, or in the back of his mind is he saying, this God darn it, I don't want to. What do you think? Is it complicated?
Well, I think there's a little bit of cognitive dissonance for Jerome Powell right now, because I think you're right. I do think that he's resistant to being seen as kind of caving in to what Donald Trump is saying. On the other hand, Donald Trump happens to be right here. I mean, the Fed is too tight. You mentioned inflation. Joe, I don't think the problem is inflation. I think that the problem is deflation. I mean, you look at commodity prices, they've been falling very significantly. That's one of the reasons the farmers are suffering so much, is because prices are so low. I think the Fed has to cut rates not to stimulate the economy, but to get level prices. And by the way, if you do that, I think you will see a nice boom in the economy. So one of the things that always annoyed me was people said, back when in September and December, when the Fed raised rates, especially in December, a lot of people think that the Fed did that in response to what Trump had said. Because remember, Trump was saying, you know, you have to cut rates, so that the Fed then went out to, quote, prove its independence by raising rates. Well, you remember what happened in December was a catastrophe. The stock market fell by 1,500 points and so on. So my only point is the Fed should do the right thing. No, the president shouldn't dictate Fed policy, but I do think that the president has the right to weigh in on these things and to express his opinion.
Is he taking the right approach, do you think, if he were a psychologist? President Trump.
I mean,
yeah, right.
Trump or
no, yesterday President Trump could have said, you know what, I was really early on this, and the Fed didn't listen. They did that in December.
That's not Trump's style. I mean,
but then he could have said, but you know what? Now they're talking about, they're listening to me. They're finally seeing the light. And I think that I started them on the right track. And now that's how maybe but he doesn't. He just is relentless.
I mean, you may be exactly right. I mean, I do think the Fed is going to cut at least once, maybe twice. I'm certainly in favor of reversing the December rate increase, which was a disaster. But look, Trump, you're not going to get this guy to close his mouth. You know, I mean, you've talked to him many times.
Right.
He wants to weigh in on this, and it's appropriate. He took a lot of flack for mouthing out about what the Fed is doing. And look, he's the CEO of our economy. He has the right to weigh in on this, and the Fed has the right to.
But do you think it makes the job more complicated for Jay Powell and company?
Maybe a little bit. And so, he's made his point. At this point, I think he should sit back and let the Fed make its choice. But the president, I believe, I don't know if he said this on your show yesterday, he's been on record for 100 basis point decline in interest rates. That's a lot. Even I wouldn't be in favor of that. I'd be in favor of 1 or 2.
How necessary are the cuts? I mean, how weak is the economy, or is it just inflation you're concerned about?
I'm so glad you asked me this, because I read the Wall Street Journal this morning. I read, Bloomberg, all these other, and they're all saying, oh my gosh, the Fed has to cut rates because the economy is slowing down. I want to be very clear on this. That's not the reason the Fed has to cut rates. The Fed has to cut rates because prices have been falling. And once those prices stabilize, you just stop cutting rates. And so there's this mythology out there in the investment community that somehow printing money is going to improve the economy. That doesn't work very well. I mean, if that worked well, Zimbabwe and Venezuela would have the strongest economy. So, I've always believed the Fed's central role should be to keep prices stable. You guys mentioned, what is it? The last 4 months, the Fed has been below its inflation target of 2%. The alarm bell should be going off that they're too tight. Once the inflation rate, and by the way, did you say we're going to get the PPI numbers?
Yeah, 8:30.
Well, let's see what that shows us. I mean, if that's below their target, it's more indication that they have to.
Is deflation on the cards globally again? Is that a genuine fear or
not?
But
deflation is all a function of monetary policy. I mean, that all you have to do to reduce, to get rid of deflation is reflate. It's not. It's this stuff.
God, I
is not
thought
that
we
complicated.
were.
But we're not. But we're not doing it enough. I mean, look, the proof of the pudding is in the eating, right? People say, well, they are pumping money in the economy. Where is it? If they are, why do you see the price of soybeans and the price of oil and all these other things falling?
The President Trump talked yesterday about quantitative tightening,
yes.
just kind of letting the balance sheet wind down and doing some of these things. I thought all economists were pretty much in agreement that needed to happen, that we're no longer in emergency measures, and if anything, we wanted to get that back in shape before we even raised rates.
But, look, I think there's two sides to that equation. Eventually, yes, we do want to reduce that balance sheet. On the other hand, it is true when you're taking money out of the economy, by reducing the balance sheet, that actually contributes to a deflationary effect. So I think the Fed I think there are two sides to that equation. By the way, there are some economists, like my friend David Malpass, who is now the head of the World Bank, who actually thinks, and I think there's something to this, that when actually the Fed reduces its balance sheet, that actually, has the opposite effect that some people think it would in terms of money.
So you can tell me.
I was hoping, Joe, you were going to say, hey, Steve Moore has been vindicated, because I've been saying for 4 or 5 months, not just the
I'll say that, but at this point, that's at this point in time.
Yeah.
There's a lot of indications that, I guess you forgot the cover of Time that had Greenspan, Larry Summers, and Bob Rubin as the 3 guys that saved the economy right before the financial crisis.
Right.
Okay, so it's hard to. You don't know how long your victory lap lasts, and that's what I'm worried about. And I want you to tell me I don't need to worry, because I want to be told that the next time a recession comes, we will be able to manage it. I want to know that with rates this low, there's something in the tank that allows. Because I think that there's a law of diminishing returns, and that these guys are going to be pushing on us.
Here's where I disagree with you on this, Joe.
No, I'm just positing it. I don't say
the rationale. People say, the Fed has to keep rates high so that they have ammunition to deal with the next recession that they themselves are causing by keeping rates too high. So that's why I don't like that.
So there's not bubbles built up by easy money staying.
We have two problems with the economy right now. One is the Fed is too tight, and the second is this big trade war with China.
Debt bubble, Stephen? There's not a debt bubble built up right now globally?
Yeah, sure there's a debt bubble. But,
is it that we can't raise rates because we can't handle it if we do it?
If you think there's a big debt bubble out there, then why do you think interest rates are so low? Come on.
That doesn't make sense, right?
So, the fact is that if there was this massive explosion of debt that was going to blow up in people's pockets, people wouldn't be lending money.
Right? I know all the usual suspects. You know the guys I'm talking about.
Yeah. But look, you get the rate, 1 or 2 rate cuts, and if you get a trade deal with China this year, 2020 is going to be one of the great years for the economy. Because I think we're fundamentally sound on the economy, except, Joe, you're right, for the debt situation.
We had Commerce Secretary Ross here today, and his point was this is going to be a very complicated 20,000 pages or longer trade deal that's needed. You think we actually get a trade deal this year, or this is something that's going to play out?
Becky, this isn't going away anytime soon. This is going to be this is the issue for the next decade, right? This dispute between China and the U.S. What I've told the president is, look, you have to get the best deal you can with China now. Get this thing resolved for now. Then you go into 2020 with a really strong economy. I think
so you do a deal just in order to have a strong economy, just to win an election.
Well, get something. Get some concessions from China now, because he's
just going to do a soft deal no matter what.
Well, look, I want to get Trump reelected because I think it's incredibly important for the American economy. The way you do that is you get what you can now, and I think you'd agree if they get some agreement. The economy and investors will be very relieved.
The market would
but that means you're doing a once-in-a-generation trade deal with the second biggest economy in the world to juice the economy for 12 months to win an election. That's not sensible strategy. If President Xi's watching this, he'll be rubbing his hands.
No, what I am saying is that if Trump gets... Look, we all know Trump is a very hardliner when it comes to China. Nobody believes that he's going to cave into China. I'm not suggesting that. I'm just saying, try to get some good, decent deal. And then you continue these negotiations in 2021. And in fact, Trump can spend his second term really beating up on China, really going after some of these abuses.
So the first one wouldn't actually be a deal then? It would just be a temporary agreement because the deal's still to come? I mean, but
this is complicated stuff. I mean,
but that's a fair point.
There's so many issues on the table. There's intellectual property. There's, currency manipulation. There's opening their markets. There's their terrorists. All of these things. I mean, it's hard to get all of that resolved in one deal.
I'm sure.
Yeah. So we'll see how this progresses. I just don't want to go into the presidential election without some resolution of the China situation as a Trump fan.
So 3 minutes ago, the president tweeted,
the same thing.
The United States has very low inflation, a beautiful thing.
Does he see the PPI number?
Sorry?
Does he see the PPI number ahead of time?
That's a good
I thought of it.
He's not supposed to put that.
I thought of it a different way. I thought, he's watching again, and he heard Stephen Moore saying that the Fed is
did
worried
he just
about
tweet
inflation.
that out?
He did.
Wow, you were talking.
Yesterday he was watching it and called him.
But look, I mean, I agree with him. You got a perfect picture right now. You've got very low inflation. You got low interest rates. You got the tax cut. You got the deregulation.
You got no collusion.
A pro-business president. What's not to like about this picture?
Look,
I mean,
because he's tweeting
I'm
about
bullish
that
on
too,
the U.S. economy.
as you can imagine. All right, Stephen Moore. If you were on the Fed, he might have said, I have some of my people on the Fed, right?
He's got 2 open seats.
He's got 2 open seats.
So, and by the way, he gets 2 people in there that think like I do and Herman Cain does and he does. Then I think you will have a potential change in the way that Fed operates.
All right.